Hello viewer, welcome to my YouTube channel. In this video, I will solve the Institute of Chartered Accountants of India issued mock test paper 4 Economics of the December 2025 Series 1 of Foundation level. I will read the questions, and then I will read the available options. Then I will solve each question and provide and show you the simple and precise explanation of each of my answers. In this video, you will see that I have already marked and highlighted the correct option in the yellow color. So, watch the video with your relevant mock test question paper and notebook, and try to solve it with me. Let's begin. Question No. 1. What is the similarity between the subprime crisis and Greece crisis? Option A. High financial leverage. Option B. Low interest rate. Option C. Credit expansion. Option D. All of the above. Answer. As both crises featured high leverage, low rates, and easy credit fueling bubbles and vulnerabilities. Question No. 2. In explaining the level of unemployment, Keynes emphasized. Option A. Changes in technology. Option B. Aggregate demand. Option C. Inflationary expectations. Option D. Lending by financial institutions. Answer. As Keynes argued that insufficient aggregate demand causes unemployment, as firms produce less when demand falls. Question No. 3. An increase in marginal propensity to consume will. Option A. Lead to the consumption function becoming steeper. Option B. Shift the consumption function upwards. Option C. Shift the consumption function downwards. Option D. Shift the savings function upwards. Answer. As MPC is the slope of the consumption function, a higher MPC makes it steeper, showing more consumption per income increase. Question No. 4. Which is the main objective of a tax? Option A. Increase in consumption. Option B. Increase in production. Option C. Raising public revenue. Option D. Reduction in capital formation. Answer. As the primary goal of taxation is to generate revenue for government spending on public goods and services. Question No. 5. The value of which work is added in the calculation of GDP? Option A. Housewife's works. Option B. A teacher teaching his own child. Option C. The value of resale of old shares. Option D. Construction of a new house by an artisan. Answer. As new production like building a house adds to GDP, household work, own child teaching, and resale of shares do not. Question No. 6. The objective of the fiscal policy of the government should be. Option A. To increase production. Option B. To reduce inequality of income and wealth. Option C. To maintain economic growth. Option D. All of the above. Answer. As fiscal policy aims to boost production, reduce inequality, and sustain growth through spending and taxation. Question No. 7. Quantitative restrictions refer to limits set by countries to curb. Option A. Imports. Option B. Exports. Option C. Imports and exports. Option D. None of the above. Answer. As quantitative restrictions, quotas, limit volumes of imports or exports to protect domestic markets. Question No. 8. Theory of mercantilism propagates. Option A. Encourage exports and imports. Option B. Encourage exports and discourage imports. Option C. Discourage exports and imports. Option D. Discourage exports and encourage imports. Answer. As mercantilism seeks trade surpluses by promoting exports and restricting imports to accumulate wealth. Question No. 9. The quantity of dollars supplied will decrease if. Option A. Imports into the United States increase. Option B. The expected future exchange rate falls. Option C. The interest rate in the United States falls. Option D. Fewer U.S. residents travel abroad. Answer. As when U.S. residents travel abroad, they supply dollars to buy foreign currency. If they travel less, the supply of dollars in the foreign exchange market decreases. Question No. 10. EVA digital assistance robot of HDFC Bank is. Option A. An intermediate good. Option B. A consumer good. Option C. A capital good. Option D. None of these. Answer. As the robot is a man-made instrument of production used by the bank to provide services over a long period, making it a capital good. Question No. 11. Gross investment refers to. Option A. Private investment minus public investment. Option B, net investment plus replacement investment. Option C, net investment after it has been inflated for changes in the price level. Option D, net investment plus net exports. Answer, as gross investment is the total expenditure on new capital goods, which includes both the addition to the capital stock, net investment, and the replacement of worn-out capital, depreciation, replacement investment. Question No. 12. Which one of the following is not a function of Finance Commission in India? Option A, devolution of income tax. Option B, devolution of excise duty. Option C, award of grants in aid. Option D, devolution of trade tax. Answer, as the Finance Commission deals with the distribution of net proceeds of taxes, like income tax and excise duty, and grants in aid between the union and states. Trade tax is a state-level matter and not part of the central devolution process. Question No. 13. Who is the chairman of the 16th Central Finance Commission, Government of India? Option A, Mr. N.K. Singh. Option B, Mr. Y.V. Reddy. Option C, Mr. M. Govinda Rao. Option D, Dr. Arvind Panagaria. Answer, as Dr. Arvind Panagaria was appointed as the chairman of the 16th Finance Commission in late 2023. Question No. 14. Differentiated products as a characteristic of. Option A, monopolistic competition only. Option B, oligopoly only. Option C, both monopolistic competition and oligopoly. Option D, monopoly. Answer, as product differentiation, making products appear different through branding or features, is a key feature in monopolistic competition and can also exist in differentiated oligopolies. Question No. 15. Under which market form, the demand curve is steeper as compared to monopolistic competition? Option A, monopoly. Option B, oligopoly. Option C, perfect competition. Option D, none of these. Answer, as a monopoly has a steeper demand curve because there are no close substitutes, making demand highly inelastic compared to monopolistic competition where many substitutes exist. Question No. 16. Which of the following cost curves is rectangular hyperbola? Option A, average cost curve. Option B, marginal cost curve. Option C, average variable cost curve. Option D, average fixed cost curve. Answer, as the average fixed cost curve is a rectangular hyperbola because total fixed cost is constant. As output increases, AFC falls, but the area under the curve, AFC into Q, always equals TFC. Question No. 17. Cost refers to actual payment made by the entrepreneur to the providers of factor services. Option A, explicit. Option B, implicit. Option C, variable. Option D, fixed. Answer, as explicit costs are out-of-pocket expenses paid to outsiders, such as wages, rent, and raw materials. Question No. 18. AVC can fall even when MC is rising, provided. Option A, MC is less than AVC. Option B, MC is greater than AVC. Option C, MC equals AVC. Option D, none of these. Answer, as long as the marginal cost, the cost of the next unit, is lower than the current average variable cost, it will continue to pull the average down, even if the marginal cost itself is starting to increase. Question No. 19. Which of the following is not an essential condition of pure competition? Option A, large number of buyers and sellers. Option B, homogeneous product. Option C, freedom of entry. Option D, absence of transport cost. Answer, as pure competition requires large numbers of buyers, sellers, homogeneous products, and free entry, exit. Absence of transport cost is an additional condition required for perfect competition, but not necessarily for pure competition. Question No. 20. Broad money refers to Option A, M1. Option B, M2. Option C, M3. Option D, M4. Answer, as in India, M1 is known as narrow money, while M3 is referred to as broad money because it includes M1 plus time deposits with the banking system. Question No. 21. Price discrimination will be profitable only if the elasticity of demand in different markets in which the total market has been divided is. Option A, uniform. Option B, different. Option C, less. Option D, 0. Answer, as, if elasticity is the same, the monopolist would charge the same price in both markets. Price discrimination works by charging a higher price in the market with lower, inelastic, demand and a lower price where demand is higher, elastic. Question No. 22. Markets fail because. Option A. Externalities are not accounted for in pricing and quantity decisions of firms. Option B. Most often the prerequisite of competition is unlikely to be present in an economy. Option C. Prices fail to reflect the true costs and benefits to the society. Option D. All the above. Answer, as, market failure occurs when the price mechanism fails to allocate resources efficiently, which can happen due to externalities, lack of perfect competition, or prices not reflecting social costs, benefits. Question No. 23. Business cycle emerge in. Option A. Socialist economy. Option B. Free market economy. Option C. Mixed economic system. Option D. None of the above. Answer, as, business cycles are inherent features of free market economies where private investment and consumer spending fluctuations lead to periods of expansion and contraction. Question No. 24. The reverse repo rate is. Option A. RBI borrows from the government. Option B. Commercial banks lend money to RBI. Option C. Commercial banks rediscount the bills of exchange with RBI. Option D. RBI lends money to commercial banks. Answer, as, here ICAI given wrong option A as the answer of this question. The correct option should be option B and not option D. Repo rate right pointing arrow RBI lends money to commercial banks, injects liquidity. Reverse repo rate right pointing arrow RBI borrows money from commercial banks, absorbs liquidity. Question No. 25. Which of the following does not enter into the calculation of national income? Option A. Exchange of previously produced goods. Option B. Exchange of second-hand goods. Option C. Exchange of stocks and bonds. Option D. All the above. Answer, as, second-hand transactions, resale of financial assets, and exchanges of previously produced goods aren't counted in national income. Question No. 26. Which of the following is an implication of the imposition of price ceiling below the equilibrium price? Option A. Shortages in the market. Option B. Problem of allocation of limited supplies among large number of consumers. Option C. Black marketing. Option D. All of the above. Answer, as, a binding price ceiling causes shortages, rationing problems, and black markets. Question No. 27. Which market sells both homogeneous as well as differentiated goods? Option A. Oligopoly. Option B. Perfect competition. Option C. Monopoly. Option D. None of these. Answer, as, oligopolies can produce standardized, homogeneous products, like cement or steel, or differentiated products, like automobiles or soft drinks. Question No. 28. Government of India recently launched Make in India program. What will be its impact on aggregate demand of India? Option A. Likely to increase. Option B. Likely to fall. Option C. No impact. Option D. None of these. Answer, as, Make in India encourages investment and domestic production, both of which are components of aggregate demand. AD equals C plus I plus G plus X minus M. Here C equals consumption expenditure, I equals investment expenditure, G equals government expenditure, X equals export and M equals import. Question No. 29. Which one of the following is the best example of agreement between oligopolists? Option A. GATT. Option B. OPEC. Option C. WTO. Option D. UNIDO. Answer, as, OPEC, Organization of the Petroleum Exporting Countries, is a classic example of a cartel, where independent producers agree to coordinate production and pricing. Question No. 30. TRIP stand for. Option A. Trade-related intellectual property rights. Option B. Transaction-related intellectual property rights. Option C. Trade-related intelligence property rights. Option D. Trade-related international rights. Answer, as, TRIPS or Trade-Related Intellectual Property Rights is an international legal agreement between all the member nations of the World Trade Organization, WTO, regarding intellectual property. Question no. 31. The substitution effect takes place due to change in option A, income of the consumer. Option B, prices of the commodity. Option C, relative prices of the commodities. Option D, all of the above. Answer: as the substitution effect occurs when a consumer replaces a more expensive item with a less expensive one because its relative price has changed. Question no. 32. Successful business firms spend considerable time, energy, and efforts in analyzing for their products. Option A, supply. Option B, price. Option C, demand. Option D, none of these. Answer: as analyzing and forecasting demand is crucial for firms to plan production, pricing, and marketing strategies effectively. Question no. 33. By way of an optimal choice, a consumer tends to Option A, save money. Option B, purchase large quantity. Option C, maximize satisfaction. Option D, maximize satisfaction subject to constraints like tastes and preferences. Answer: as consumer rationality assumes that individuals seek the highest level of utility, satisfaction, possible within the limits of their budget and based on their personal preferences. Question no. 34. The economist's concept of demand is desire or need or choice or preference or order. Option A, the same thing. Option B, not the same thing. Option C, A or B. Option D, none of these. Answer: as in economics, demand requires not just a desire but also the ability to pay and willingness to pay at a specific price and time. Question no. 35. The demand for labor in response to the wage rate is whereas the demand for same labor in response to the price of electronic goods where labor enters as an input is. Option A, derived demand, direct demand. Option B, direct demand, derived demand. Option C, individual demand, market demand. Option D, company demand, industry demand. Answer: as demand for a factor of production, like labor, for its own sake is direct. However, when labor is demanded because it helps produce a final good, like electronics, it is called derived demand. Question no. 36. Assertion A. In the short run, a producer operates in only two-stage of law of diminishing returns where average product of variable factor is declining. Reason R. In stage 1 and stage 3 the marginal product of the fixed and the variable factors respectively are negative. Option A is true and R is false. Option B, both A and R are true and R is the correct explanation of A. Option C, both A and R are true and R is not the correct explanation of A. Option D, A is false and R is true. Answer: as a rational producer avoids stage 1, where fixed factors are underutilized, and stage 3, where total product falls. Therefore, they always operate in stage 2, the stage of diminishing returns. Question no. 37. Which of the following groups of goods have inelastic demand? Option A, salt, smartphone and branded lipstick. Option B, school uniform, branded goggles and smartphone. Option C, salt, school uniform and medicine. Option D, medicine, branded sports shoes, and diamond ring. Answer: as these are necessities with few or no close substitutes. People will buy them even if prices increase significantly, making their demand inelastic. Question no. 38. If the price of a commodity raised by 12% and ED is negative 0.63, the expenditure made on the commodity by a consumer will. Option A, decrease. Option B, increase. Option C, remain same. Option D, can't say. Answer: as when demand is inelastic, modulus of ED greater than 1, price and total expenditure move in the same direction. Since price increased, total expenditure will also increase. Question no. 39. A consumer's preferences are monotonic if and only if between two bundles, the consumer prefers the bundle which has Option A, more of one of the goods. Option B, less of at least one of the goods. Option C, more of at least one of the goods and less of the other good. Option D, more of at least one of the goods and no less of the other good. Answer: as monotonic preference means more is always better. A consumer will always prefer a bundle that contains more of at least one good without having less of any other. Question no. 40. During lockdown due to COVID-19, a consumer finds the vegetable vendors selling vegetables in the street have raised the prices of vegetables than usual prices. She will buy vegetables then, as her usual demand, showing the demand of vegetables is option A. More, inelastic demand. Option B. Less, elastic demand. Option C. Same, inelastic demand. Option D. Same, elastic demand. Answer: as vegetables are necessities. During a crisis, even if prices rise, consumers tend to buy their usual amount because they need them to survive, indicating inelastic demand. Question no. 41. Money cost is considered by option A. Modern theory of trade. Option B. Comparative cost advantage. Option C. New trade theory. Option D. Factor equalization theorem. Answer: as unlike classical theories that used labor time or opportunity costs, modern trade theories, like Heckscher-Ohlin, use money costs, prices of factors, to explain trade patterns. Question no. 42. More expansion of foreign direct investment can boost option A. Money circulation. Option B. Demand. Option C. Employment. Option D. Unemployment. Answer: as FDI brings in capital and technology, leading to the setting up of new industries or expansion of existing ones, which directly creates more job opportunities. Question no. 43. Which of the following is not a criterion for determining distribution of central taxes among states for 2021-26 period? Option A. Demographic performance. Option B. Forest and ecology. Option C. Infrastructure performance. Option D. None of these. Answer: as the 15th Finance Commission used criteria like income distance, population, 2011 area, forest and ecology, demographic performance, and tax effort, not infrastructure performance. Question no. 44. Which of the following is not an element of good public expenditure management? Option A. Elasticity. Option B. Economy. Option C. Productivity. Option D. Deficit. Answer: as good expenditure management focuses on efficiency, economy, effectiveness, productivity, and flexibility, elasticity. A deficit is an outcome of budget imbalance, not a management principle. Question no. 45. Computers and computer software are option A. Substitute goods. Option B. Complementary goods. Option C. Independent goods. Option D. Normal goods. Answer: as these goods are used together to satisfy a single want. A computer is largely useless without software, and software needs a computer to run. Question no. 46. If the amounts of two commodities purchased both increase or decrease when the price of one change, the cross elasticity of demand between them is option A. Negative. Option B. Positive. Option C. 0. Option D. 1. Answer: as this describes complementary goods. When the price of one goes up, the demand for both falls. A negative relationship between price of X and demand for Y results in negative cross-elasticity. Question no. 47. Which aspect of taxation involves normative economics? Option A. The incidence of, i.e., who actually pays for the tax. Option B. The effect of the tax on incentives to work. Option C. The fairness of the tax. Option D. All of the above. Answer: as normative economics deals with what ought to be or value judgments. Determining if a tax is fair is a matter of opinion and social values. Question no. 48. According to British economist J. M. Keynes was the main cause of massive decline in income and employment during Great Depression of 1930. Option A. Lower aggregate expenditure in the economy. Option B. Banking crises and low money supply. Option C. Overdebtedness. Option D. Lower profits and pessimism. Answer: as Keynes argued that the Great Depression was caused by a massive collapse in aggregate demand expenditure, leading to a downward spiral in production and jobs. Question no. 49. When real income rather than money income is kept constant in drawing a consumer's demand curve for a commodity, the demand curve is negatively sloped. Option A. Always. Option B. Never. Option C, sometimes. Option D, often. Answer, as. This refers to the compensated Hicksian demand curve, which only shows the substitution effect. Since the substitution effect is always negative, the curve is always downward sloping. Question No. 50. Which one of the following is not an internal economies of scale? Option A, technical economies. Option B, financial economies. Option C, economies due to localization of industries. Option D, marketing economies. Answer, as. Localization economies are external economies because they arise from the growth of the entire industry in a region, not from the expansion of a single firm. Question No. 51. A mathematical relationship showing the maximum output that can be produced by each and every combination of inputs is called. Option A, production equation. Option B, production function. Option C, production schedule. Option D, production identity. Answer, as. A production function defined as Q equals function of L and K shows the technological relationship between physical inputs and maximum possible output. Here Q equals output, L equals labor and K equals capital. Question No. 52. In economics, generally the classification of the markets is made on the basis of Option A, time. Option B, geographic area. Option C, volume of business. Option D, all of these. Answer, as. Markets can be classified by time, short, long run, area, local, national, global, or volume of transactions, retail, wholesale. Question No. 53. Peak is the stage of expansion. Option A, later. Option B, earlier. Option C, either A or B. Option D, none of the above. Answer, as. In a business cycle, the peak represents the final stage of the expansion phase before the economy starts to contract. Question No. 54. Repercussions of business cycles get felt on nearly all economic variables. Option A, alternatively. Option B, simultaneously. Option C, one by one. Option D, all of the above. Answer, as. Business cycles are pervasive, meaning their effects spread through the entire economy and impact various sectors and variables at the same time. Question No. 55. In order to influence spending on the goods and services in the short run, is directed at directly influencing interest rate. Option A, fiscal policy. Option B, budgetary policy. Option C, monetary policy. Option D, economic policy. Answer, as. Monetary policy, managed by the central bank, uses tools like interest rates to control the money supply and influence overall economic activity. Question No. 56. Consider the following statements and select the correct answer from the given options. Assertion A, asterisk in the short run under perfect competition, given the market demand and market supply, the industry is in equilibrium at that price which clears the market. Reason R, asterisk in the long run all the firms in the industry earns profit. Option A, both A and R are true and R is the correct explanation of A. Option B, both A and R are true and R is not the correct explanation of A. Option C, A is true but R is false. Option D, A is false but R is true. Answer, as. Short-run equilibrium clears the market. In the long run, firms earn normal profit, not supernormal. Question No. 57. Which of the following is correct regarding long-run cost? 1. It is least cost of producing each level of output. 2. LAC curve is envelope of SAC curves. 3. LAC is U-shaped. Option A, 1 and 2 only. Option B, 2 and 3 only. Option C, 1 and 3 only. Option D, 1, 2 and 3. Answer, as. The long-run average cost, LAC, curve represents the minimum cost for each output level, envelopes all short-run average cost, SAC, curves, and is typically U-shaped due to diseconomies of scale. Question No. 58. The elasticity of supply at any point on a given supply curve passing through the origin point making angle of 35 degree with x-axis is. Option A, greater than 1. Option B, less than 1. Option C, equal to 1. Option D, any of the above. Answer, as. Any linear supply curve that passes through the origin has a price elasticity of supply equal to 1, regardless of the angle it makes with the axis. Question No. 59. Management of the firm control over macroeconomic factors. Option A has. Option B has no. Option C has partial. Option D none of these. Answer as macroeconomic factors like national inflation, global trade, or government policy are external environmental factors that an individual firm cannot control. Question No. 60. Which of the following is a lagging economic indicator? Option A. Consumer Confidence Index. Option B. Stock market performance. Option C. Unemployment rate. Option D. New housing starts. Answer as lagging indicators change after the overall economy has already begun to follow a particular trend. Unemployment usually rises only after a recession has already started. Question No. 61. Which of the following is implication of fiscal deficit? Option A. Crowding out. Option B. Inflationary spiral. Option C. Erosion of government credibility. Option D. All of these. Answer as here ICAI given wrong option A as the answer of this question. The correct option should be option D and not option C. A fiscal deficit occurs when a government's total expenditures exceed its total revenue, excluding borrowings. This leads to several significant economic implications. Crowding out effect. When the government borrows heavily from the financial market to fund its deficit, it reduces the supply of loanable funds available for private investors. This often leads to higher interest rates, crowding out private investment. Inflationary spiral. If a government finances its deficit by borrowing from the central bank, printing more money, it increases the money supply. This can lead to higher prices for goods and services, potentially triggering an inflationary spiral. Erosion of government credibility. Persistent and high fiscal deficits can lead to concerns about a government's ability to manage its finances and repay its debts. This erodes trust among domestic and international investors, potentially leading to lower credit ratings. Question No. 62. India's foreign exchange reserves has jumped high. The reason may be Option A. Inflow foreign exchange. Option B. Outflow of foreign exchange. Option C. Autonomous payments over autonomous receipts. Option D. All the above. Answer as foreign exchange reserves increase when there is a net inflow of foreign currency into the country through exports, FDI, or other receipts. Question No. 63. Which of the following is the primary objective of economic planning in India? Option A. Abolition of poverty. Option B. Removing unemployment. Option C. Growth with social justice. Option D. Reducing inequality of income. Answer as Indian planning has traditionally aimed not just for GDP growth but for inclusive growth that ensures the benefits reach all sections of society. Question No. 64. The program of economic reforms in India was started on Option A. 26th July 1990. Option B. The 23rd of July 1992. Option C. The 21st of July 1991. Option D. 24th July 1991. Answer as on this date, the new industrial policy was announced, marking the beginning of liberalization, privatization, and globalization (LPG) in India. Question No. 65. Impure public goods are Option A. Private goods. Option B. Public goods. Option C. A package of public and private goods. Option D. Harmful goods for the society. Answer as impure public goods, like cable TV or crowded parks, have some characteristics of both public and private goods. They might be non-rival but excludable, or non-excludable but rival. Question No. 66. REER, real effective exchange rate is Option A. Weighted average of forward exchange rates. Option B. Nominal rate adjusted for interest. Option C. Nominal effective exchange rate adjusted for inflation. Option D. None of these. Answer as REER is a weighted average of a country's currency relative to an index of other major currencies, adjusted for the effects of inflation, price levels in the respective countries. Question No. 67. Brownfield investment refers to Option A. Building new infrastructure. Option B. Investing in agriculture. Option C. Buying or leasing existing setups. Option D. None of these. Answer. As, unlike greenfield investment starting from scratch, brownfield investment involves a company investing in or purchasing existing production facilities. Question No. 68. FDI in India is encouraged through all except. Option A. Tax holidays. Option B. Ease of doing business. Option C. Protectionists import bans. Option D. SEZ. Answer. As, protectionist bans discourage foreign investment as they hinder global trade. India encourages FDI through incentives like tax holidays and special economic zones (SEZ). Question No. 69. Which initiative focuses on sustainable lifestyle choices? Option A. NDAP. Option B. Shunya. Option C. LIFE. Option D. Make in India. Answer. As, introduced by the Indian Prime Minister, LIFE, Lifestyle for Environment, is a global initiative to encourage individual and collective action to protect the environment. Question No. 70. Which policy ended the license Raj? Option A. Industrial Policy Resolution 1956. Option B. New Industrial Policy 1991. Option C. GST Act 2017. Option D. PLI Scheme 2020. Answer. As, this policy drastically reduced industrial licensing requirements, effectively ending the era of heavy government control known as the License Raj. Question No. 71. Which organization launched India Policy Insights (IPI)? Option A. SEBI. Option B. RBI. Option C. NITI Aayog. Option D. None of these. Answer. As, India Policy Insights is a NITI Aayog initiative. Question No. 72. Which of these is not a public sector monopoly anymore? Option A. Atomic energy. Option B. Railways. Option C. Telecom. Option D. Arms and ammunition. Answer. As, telecom is no longer a public sector monopoly. Question No. 73. Non-tariff measures that affect product quality and standards are called. Option A. Quotas. Option B. Technical barriers to trade (TBT). Option C. Tariff quotas. Option D. None of these. Answer. As, TBT are regulations or standards related to product characteristics, labeling, or packaging that can act as barriers to trade. Question No. 74. GDP deflator is used to measure. Option A. Fiscal deficit. Option B. Inflation. Option C. Trade balance. Option D. Saving rate. Answer. As, the GDP deflator measures the ratio of nominal GDP to real GDP, showing the change in prices of all domestic goods and services. Question No. 75. The income received but not earned is part of. Option A. National income. Option B. Personal income. Option C. Factor income. Option D. Disposable income. Answer. As, this refers to transfer payments, like pensions or unemployment benefits. They are not part of national income, earned income, but are included in personal income because individuals receive them. Question No. 76. Mixed income of self-employed includes. Option A. Rent and interest only. Option B. Wages only. Option C. Capital and labor income that cannot be separated. Option D. Only profit. Answer. As, for self-employed individuals, like a shopkeeper, it's impossible to distinguish between their wages as a worker and their profits as an owner, so the total is called mixed income. Question No. 77. Moral hazard refers to. Option A. Risk-taking due to insurance cover. Option B. Uninformed pricing. Option C. Externalities. Option D. High subsidies. Answer. As, moral hazard occurs when an individual or entity takes more risks because they know the potential costs will be borne by someone else, like an insurance company. Question No. 78. Which exchange rate regime is adopted by highest no of IMF members? Option A. Hard peg. Option B. Floating. Option C. Free floating. Option D. Soft peg. Answer. As, soft pegs, where a currency is loosely tied to another, are more common globally than strictly hard pegs or completely free-floating regimes. Question No. 79. the U shape of the short-run average cost curve is due to option A. Fixed inputs. Option B. Increasing and then diminishing returns. Option C. Constant returns to scale. Option D. None of these. Answer. As short-run costs are governed by the law of variable proportions. Costs first fall due to increasing returns to the variable factor and then rise due to diminishing returns. Question No. 80. Which of the following costs is not considered while calculating accounting cost? Option A. Rent paid. Option B. Salary paid. Option C. Interest on borrowed funds. Option D. Normal profit. Answer. As accounting costs only include explicit, recorded expenses. Normal profit is an implicit cost, the minimum return needed to keep the entrepreneur in business, and is only considered in economic cost. Question No. 81. A trough in the business cycle indicates. Option A. The highest level of economic activity. Option B. A period of zero unemployment. Option C. The lowest point of economic decline. Option D. None of these. Answer. As a trough is the bottom of a business cycle, where the contraction ends and the next expansion begins. Question No. 82. In the four-sector model, which of the following is not a leakage from the circular flow? Option A. Saving. Option B. Investment. Option C. Imports. Option D. None of these. Answer. As leakages like saving, taxes, imports remove money from the flow. Injections like investment, government spending, exports add money to the flow. Question No. 83. When income increases and APC decreases, it indicates that. Option A. Autonomous consumption is increasing. Option B. Marginal propensity to consume is increasing. Option C. Consumption is growing slower than income. Option D. Savings are falling. Answer. As average propensity to consume APC is C divided by Y. If income Y grows faster than consumption C, the value of APC will naturally fall. Question No. 84. The formula for the investment multiplier K is. Option A. 1 divided by MPC. Option B. 1 divided by APS. Option C. 1 divided by 1 minus MPC. Option D. 1 divided by 1 plus MPC. Answer. As the multiplier shows how much national income increases for a given increase in investment. It is calculated as 1 divided by 1 minus MPC or 1 divided by MPS. Question No. 85. Subsidy on goods with positive externalities leads to. Option A. Higher cost. Option B. Higher price. Option C. Lower price. Option D. Inefficiency. Answer. As subsidies reduce the cost of production for firms, which usually leads to a lower market price for consumers, encouraging more consumption of the beneficial good. Question No. 86. What is a liquidity trap? Option A. Money becomes illiquid due to inflation. Option B. Money supply becomes ineffective at zero interest rate. Option C. Interest rate becomes infinite. Option D. Bonds have negative yield. Answer. As in a liquidity trap, people expect interest rates to rise, so they hold on to cash instead of investing. Even if the central bank increases money supply, interest rates won't fall further. Question No. 87. Which one is not true about merit goods? Option A. Underconsumed. Option B. Government promotes them. Option C. Have negative externalities. Option D. None of these. Answer. As merit goods, like education or health, have positive externalities. Goods with negative externalities, like cigarettes, are called demerit goods. Question No. 88. Which theory introduced the idea of interest rate influencing money demand? Option A. Fisher's theory. Option B. Cambridge approach. Option C. Keynesian theory. Option D. None of these. Answer. As Keynes introduced speculative demand for money, where individuals' desire to hold cash is inversely related to the prevailing interest rate. Question No. 89. Speculative demand becomes perfectly elastic when. Option A. Inflation is zero. Option B. Interest rate is zero. Option C. Bond prices fall. Option D. None of these. Answer. As At very low or near zero interest rates, the opportunity cost of holding cash is zero, and everyone prefers to hold cash, making the demand for money perfectly elastic. Question no. 90. Which tool is used to absorb liquidity by RBI? Option A. Reverse repo rate. Option B. Repo rate. Option C. Bank rate. Option D. CRR. Answer. As, by increasing the reverse repo rate, the RBI encourages banks to park their money with it, thereby absorbing excess money from the banking system. Question no. 91. The Monetary Policy Committee sets. Option A. SLR. Option B. CRR. Option C. Repo rate. Option D. Bank rate. Answer. As, the primary task of India's MPC is to determine the policy interest rate, repo rate, required to achieve the inflation target. Question no. 92. CPI inflation target under current framework is. Option A. 5% plus minus 2%. Option B. 4% plus minus 2%. Option C. 3% plus minus 1%. Option D. None of these. Answer. As, India has a flexible inflation targeting framework where the target is 4%, with a tolerance band of plus minus 2%, i.e., 2% to 6%. Question no. 93. A dealer sells only two brands of motorcycle, Royal and Hero. It was observed that when the price of Royal rises by 10%, the demand for Hero increases by 15%. What is the cross elasticity of Hero against the price of Royal? Option A. Positive 1.5. Option B. Negative 1.5. Option C. 2.5. Option D. None of these. Answer. As, cross elasticity equals percentage change in quantity of Hero is divided by percentage change in price of Royal, equals positive 15% is divided by positive 10% equals positive 1.5. Question no. 94. Which of the following statements is correct concerning the relationship among the firm's cost function? Option A. TC equals TVC minus TFC. Option B. TFC equals TC minus TVC. Option C. TC equals TFC minus TVC. Option D. TVC equals TFC minus TC. Answer. As, total cost is the sum of total fixed cost and total variable cost. Therefore, by rearranging, TFC equals TC minus TVC. Question no. 95. When violation of law of demand occurs. Option A. Substitution effect is negative. Option B. Income effect is negative. Option C. Negative income effect is less than substitution effect. Option D. Negative income effect is greater than substitution effect. Answer. As, this happens with given goods. For these goods, when price falls, the negative income effect, making you feel richer so you buy less of an inferior good, is so strong it outweighs the substitution effect. Question no. 96. Given TC equals 2000 plus 15Q minus 6Q2 plus Q3, how much is TFC at Q equals 2000? Option A. 2000. Option B. 975. Option C. 30,000. Option D. Can't be determined. Answer. As, total fixed cost is the part of the cost function that does not contain Q, the variable. In this equation, that constant term is 2000. Question no. 97. The market demand curve for a perfectly competitive industry is QD equals 12 minus 2P and the market supply curve is QS equals 3 plus P. The market will be in equilibrium if Option A. P equals 6 and Q equals 9. Option B. P equals 5 and Q equals 2. Option C. P equals 4 and Q equals 4. Option D. P equals 3 and Q equals 6. Answer. As, QD equals QS equals 12 minus 2P equals 3 plus P. Rearranging, 9 equals 3P, so P equals 3. Substitute P equals 3 into either equation, equals Q equals 3 plus 3 equals 6. Question no. 98. In economics, we are concerned with Option A. Value in use only. Option B. Exchange value only. Option C. Both value in use and exchange value. Option D. None of the above. Answer. As, economics analyses why things are useful, value in use, and how they are traded for other things or money in the market, exchange value. Question no. 99. Which is the leading country in respect of inflow of FDI to India? Option A. Singapore. Option B. Mauritius. Option C. Japan. Option D. None of these. Answer. As, for several recent years, Singapore has been the largest source of foreign direct investment inflows into India. Question No. 100. The elasticity of supply at any point on a given supply curve passing through the origin point making angle of 35 degree with x-axis is. Option A. Greater than 1. Option B. Less than 1. Option C. Equal to 1. Option D. Any of the above. Answer. As, straight line supply through origin has unitary elasticity regardless of angle. Thank you, viewer, for watching my full video. If you still have any confusion and problems with a question from the mock test paper, then ask me in the YouTube comment section. I will help you in the comment section. Also, if you want this PDF, then click on the link given in the description or tell me in the comment section.